few quick highlights of Tesla's Q3 2023 earnings report. Profitability, 7.6% operating margin in Q3, still among the best in the industry. $1.8 billion GAAP operating income, $1.9 billion GAAP net income, and $2.3 billion non-GAAP net income in Q3. $3.3 billion in cash flow, $800 million in free cash flow, and another $3 billion in the bank, an increase of $3 billion in cash and cash equivalents. Tesla now with a war chest of $26.1 billion. Something I'm pretty sure every other company producing vehicles on the planet would do anything to have access to during the current economic storm and the transition to EVs. A whopping 4 gigawatt hours of energy storage deployed in the quarter, and Tesla more than doubling their AI training compute, which of course we should ignore because Tesla's just a car company, so why do they even need AI training compute? It's not like we're going to look back on this in a few years' time and go, oh, all the signs were there, the robotaxis have awoken and we kind of could have seen it coming. Moving on. Importantly, Tesla's cost of goods sold per vehicle decreased to $37,500 in Q3. While production costs at our new factories remained higher than our established factories, e.g. still ramping up, we have implemented necessary upgrades in Q3 to enable further unit cost reductions. We continue to believe that an industry leader needs to be a cost leader. I really like the way that Tesla's phrased that. They already see themselves as the industry leader because they are, and they're going to continue to dictate terms in terms of costs in the industry. Also, we have more than doubled the size of our AI training compute to accommodate our growing data set, as well as our Optimus robot project. Our humanoid robot is currently being trained for simple tasks through AI rather than hard-coded software, and its hardware is being further upgraded. Of course, once again, I just want to remind everyone, we should ignore the Optimus bot as well because Tesla's just a car company. The only number Wall Street will focus on this quarter, Tesla's gross automotive margin, 17.9%. For context, Tesla's total revenues in Q3 this year, despite factory shutdowns and a huge loss of production, essentially on par with Q1 of this year. Tesla also noting an increase in operating expenses driven by Cybertruck, AI, and other R&D projects. Those with attention to detail might notice something has changed on this, the current installed annual vehicle capacity numbers. California Model S and X production capacity 100,000, that's unchanged. Model 3 and Y 550,000, unchanged. Guess what? Shanghai now greater than 950,000. This has changed. Although in fairness, last quarter, the true number was greater than 950,000, but Tesla had written greater than 750,000. Go fact check me. Berlin Model Y line, steady state at 375,000 units. Texas Model Y line still noted as greater than 250,000, and brand new Cybertruck capacity greater than 125,000. Pilot production line. Obviously, we'll get more to this in a moment. This is the first production phase. The second phase of expansion on Cybertruck production will add another 125,000, and I think Tesla's going to have to, well, in fact, I'm almost certain Tesla's going to have to massively scale up their plans for Cybertruck volume. Later on this call, Elon mentioning that he thinks that Cybertruck will be around 250,000 units per year. I think this guy's massively underestimating how many people are going to buy Cybertruck in the future. I wonder what the true capacity at Shanghai is for Model 3 and Y after all. The figure that they're now using, greater than, which is a little bit of a get out of jail card because it's certainly technically true that it's greater than 950. Tesla's already had months that annualized to greater than 950 out of Shanghai a long time ago. And also Tesla's market share trailing 12 months by vehicle region in the US, Canada, Europe, and China, having increased from a literal fraction of 1% in 2017 Q3 to now multiple percentage points of market share, total market share. This isn't electric vehicles, this is total vehicles in all of the world's major markets. Over 2% in China, approaching 3% in Europe, and on the cusp of 4% in the United States and Canada. This slide, of course, we should definitely ignore. Artificial intelligence, software and hardware. We have commissioned one of the world's largest supercomputers. Man, what a waste of money. They should have spent that money on a Super Bowl ad. To accelerate the pace of our AI development, with compute capacity more than doubling compared to Q2. One of my favorite charts from the entire presentation. Tesla's unassailable data lead, cumulative miles driven with FSD beta in millions. Now in excess of 500 million miles driven in FSD beta. No one is catching up to Tesla. Why? Because no one has the data. Another of my favorite charts, the cost of goods sold per vehicle. Does anyone notice a trend? In Q4 2022, Tesla's cost of goods sold per vehicle, just over $39,500. Q3 2023, $37,500. Tesla has managed to squeeze out about $2,000 of costs in a year flat. Might not sound like a lot, but that's around 5%. Imagine if they do this over the next 12 months and the following and the following and the following. Next minute, you got a dirt cheap Tesla vehicle, which, spoiler alert, is exactly what's going to happen. As I've mentioned in the past, don't sleep on Tesla Energy. Energy storage deployments increased by 90% year over year in Q3 to 4 gigawatt hours, Tesla's highest quarterly deployment ever. Once again, anyone notice a trend here with energy storage deployments? For those who don't know, these big batteries are gigantic money printers, extremely profitable, and they're huge average selling prices for a project. One big battery can produce equivalent revenue and significantly more profit than selling hundreds, thousands of vehicles. By the way, that was a literal statement. Do the math. And finally, some of my favorite charts every report, the trailing 12-month metrics, vehicle deliveries, clear trend up, operating cash flow, free cash flow as well. We can see where Tesla's, quote, embarrassingly high prices were having an effect on operating cash flow and free cash flow. Net income and adjusted EBITDA still trending in the right direction. And now my notes from the earnings call. First, Elon's opening remarks. The very first comments out of Elon's mouth, both regarding AI. First, over 500 million FSD miles driven, 500 million miles. Tesla also bringing an insane amount of compute online with more to come. Weird for just a car company's leader to be talking about AI stuff at the start of their earnings call, isn't it? Some insight here, Tesla deploying 4 gigawatt hours of storage in the quarter. And check this out, energy and services contributing over $500 million to Tesla's quarterly profit, and it's becoming the most profitable aspect of Tesla's business. Now, if you're a longer-term Tesla investor, just think back a few years. Imagine if I had have told you that energy, just energy, would have been contributing over $500 million in quarterly profits. And remember, 90% year-over-year growth in terms of deployments. Did anyone see that coming? I feel like when Elon said that he thought that energy business could grow to be as big as the automotive business, he wasn't joking. Elon also taking the opportunity to massively temper expectations for the Cybertruck ramp. Cybertruck will have enormous challenges ramping production and becoming cash flow positive. It's a new vehicle program, which is par for the course. Plus, there's loads of new technology, and the problems encountered in ramping and becoming profitable will be proportionate to how many problems are being solved at scale. There's a lot of new problems to solve. They just can't copy everyone else. It will require immense work to reach volume production and cash flow positive at a price people can afford. Elon really taking the time to temper expectations for Cybertruck, confirming it'll be a great product, but financially, it will take maybe 12, 18 months of excruciating effort before it is a significant positive cash flow contributor. Obviously, demand for Cybertruck is off the charts, but Elon points out we have to make it and do so at a price people can afford. Multiple mentions of price people can afford. Interesting. Tesla's focus is to ramp production while maintaining positive cash flow. Expect around 1.8 million vehicles delivered in 2023. And Elon really stressing, he repeated himself here. Tesla's AI team is one of the world's best, and by far the world's best when it comes to real world AI. And if AI can type a little bit better than I can, I'll be out of a job pretty soon. Elon again doubled down on that statement, really stressing it. Tesla has the best real world AI team on earth, period. And it's getting better. So definitely ignore those remarks because Tesla is just a car company. Some remarks from Tesla's new CFO. Tesla's cost per vehicle decreased to approximately $37,500, as we know. Huge progress, about a 5% cost reduction since about a year ago. Massive. Doesn't sound like a lot, but this compounds over time. Tesla's done almost $9 billion of operating cash flow so far this year. Regarding Tesla's pricing strategy, most car buying happens with some form of financing. High rates have required price adjustments, and there's an inherent lag between Tesla's cost reductions and how quickly they've driven prices down, which obviously means that margins are getting squeezed for the short term. Now onto the investor questions, and I love the fact that retail questions are now asked up front. Institutional, saved till the end. By the way, for those who didn't see, I actually went through the top voted retail questions maybe a week ago and shared what I thought Tesla would say, and I pretty much hit it out of the park for the stuff that was obvious. When asked how many Cybertrucks Tesla expects to deliver in 2023, the answer was NFI. Elon also went on to say, and I definitely disagree with him on this, where will we end up? Roughly 250,000 Cybertrucks per year. Tesla expecting to probably reach that output rate sometime in 2025. Now, timing-wise, yeah, maybe, but I really think Tesla has underestimated how many people are going to be buying Cybertrucks per year. I really do. Don't get me wrong, I'm not expecting it'll be the best-selling pickup truck in the US, but it's possible. But number 1, 2, 3 on a good year are close to 1 million units each. I'll be surprised if Cybertruck doesn't at least crack 500,000 a year over the long term, but you never know. Regarding a progress update on the 4680 cell, some great numbers here, by the way, disclosed. I really appreciate this. We saw a 40% quarter-over-quarter cell production increase in Texas. 40% quarter-over-quarter. Insane. Scrap's also down 40% quarter-over-quarter, which is also insane. Cell costs are consistently improving, and the Cybertruck cell, which has 10% more energy density than the Model Y cell, is also going well. Regarding capacity expansion in Berlin and Austin, plus timing around Giga Mexico, make sure you're sitting down for this. Tesla's current priority is to maximize output from existing production lines in Berlin and Austin. So this is interesting. Rather than expanding, Tesla are actually trying to eke out more capacity. You might have heard some guy on the internet suggest this would happen, eking out incremental capacity improvements from existing production lines before additional expansions. Regarding Mexico, Tesla's currently laying the groundwork to begin construction and doing all the long lead items. However, this is a big update. Tesla wants to get a sense on where the global economy is going before going full tilt on Giga Mexico. This is the first time that I can recall Tesla easing up, slowing a little bit, as opposed to going full tilt. Elon confirming he is very concerned about the economy and interest rates remaining high or even going higher. Now, this is coming from a guy who never expected interest rates to be as high as they are. I mean, I literally thought there's no way, just not going to happen. And here we are. So take this with a Mount Everest-sized grain of salt. But I personally believe 12 months from now, rates will be much lower than they are. And I also think that 12 months from now, Elon will be saying, well, you know what, I probably was a little bit too cautious here. Must be the PTSD from when Tesla nearly went bust during the global financial crisis. Of course, you never know. But I think this is unnecessary caution. Don't get me wrong. It's not going to be the end of the world. But if I had to guess, my guess is that things are about as bad as they're going to get in terms of interest rates and the economic situation globally. However, the whole people killing each other things that are going on in multiple parts of the world right now, there's a lot of uncertainty, so you never know. Elon has more comments on this later. Model Y is tracking to be the best-selling car on Earth by unit volume. Number 2 and 3 cost much less than a Tesla Model Y. Now, regarding Tesla advertising, some people are going to get mad about this. 1, Tesla is advertising, which we know, and Elon points out there is something, and he's emphasized something, to be gained on the advertising front. But informing people about a car that they cannot afford doesn't help. The problem to solve is to make the vehicles affordable. It's almost as if Elon suggests that you can't advertise your way out of a recession. You can't advertise your way out of sky-high interest rates. And while there certainly is something to be said of informing people about your products and what they can do and the cost and so on, what's much more important is to make the product much more affordable. Man, Elon should really start a YouTube channel and start pointing that stuff out. The Model 3 refresh question, when's it coming out in the US? As expected, as I predicted, literally, go fact check me, was shot down. Because why would Tesla tell people on an earnings call ahead of time when they're going to release a better, probably equally affordable, if not more affordable version of a product that they're currently selling in the market? Not a good idea. Just not a good idea. Regarding 2024 volumes, Tesla is focused on growing volumes. Guess what? The 50-year multi-compound annual growth rate is officially out the window. Gone. See you later. Obviously, at some point this had to happen because you can't keep growing at that rate forever. But here it is. It's official. With Tesla easing up on Giga Mexico, rest in peace, the 50% CAGR. Elon, again, very excited about progress on autonomy and the end-to-end software, which is amazing. Also doubling down that no one will do a robot as well as Tesla. And also pointing out that the Boston Dynamics robots don't have a brain. I guess when Optimus puts them out of the job, they could always become a stock analyst on Wall Street. Sorry, that was pretty savage. Why did Tesla drop the price of FSD? Elon responds, Tesla wanted to make it affordable so people can try it, but also cautioning to regard the current price as a temporary low. Obviously, when the robotaxis awaken, the capabilities go through the roof, the price is likely to follow. Tesla also asked about whether or not they will begin accepting legal liability for FSD. Elon goes off on a bit of a tangent after some of the folks at Tesla low-key roast the crap that Mercedes have on the market, which was part of the question. Mercedes is accepting liability for this thing that works in these very small number of situations. Why doesn't Tesla? The tangent, however, quite interesting. Quote, some people understand the profundity of Tesla FSD, but not many. It's basically baby AGI. It basically needs to understand reality. And for some reason, I just wanted to visit this thing that I posted on X. I think I was describing Tesla having built the foundational seeds of AGI. Is a seed a baby plant? Oh, it is a baby plant. Oh, that's interesting, isn't it? Yeah. Guess what? I agree. Asked when will Optimus begin working in gigafactories? Question immediately shot down. Tesla's not ready to discuss details of the Optimus program, but they will provide updates in the future. Question also asked about the neural net path planning for FSD, which is currently only available in the US. When will it be expanded to outside the US? Tesla confirming that it wants to nail their capabilities in a single region first, then roll out technology slowly. That's their plan. Otherwise, it takes longer to get the technology right in any region. And now the institutional questions regarding Cybertruck. Elon doubling down around 18 months to hit volume production, profitability, and affordable prices again. affordable prices mentioned so many times. I wonder what the initial starting price for these things is going to be. Also contrasted with Tesla's next-gen vehicle, which will be less complex and have far less unique challenges. So in other words, the Cybertruck ramp is going to be the most painful product ramp possibly since production hell, maybe even worse. Cybertruck is one of those special products that comes along only once in a long while. It will be incredibly difficult to bring to market, to reach volume, and be profitable. Regarding the next-gen vehicle, e.g. higher volume, low-cost, smaller vehicle, some interesting insights here. It is much more conventional in terms of the technologies going into it. It's likely to be a very fast ramp. It's optimized for a units per minute rate that is unheard of in the automotive industry. And check this out, Elon really tempering expectations. To be clear, it will be cool, but it's utilitarian. E.g., it's designed to get you from point A to point B. E.g., do not expect the same level of features and functionality of a typical Tesla. Performance, probably going to suck. And by suck, I mean just be super average. Don't expect to be able to play Elden Ring in the front or the back. Don't expect it to have a lot of the bells and whistles, incredible suspension. Look, it's going to be a very, very watered down, generic, literally utilitarian vehicle. Meaning, extremely affordable to purchase, extremely functional, extremely utilitarian. No unnecessary expenses. You're not going to have a ridiculously amazing sound system with a trillion different speakers. Everywhere Tesla can bring out costs, they will. This is the vehicle that absolutely destroys, and I mean destroys, the mass market internal combustion engine. Gone. Because as we know, the Model 3 and Model Y are fantastic, but they have so many features that are not necessary. Nice to have, but not necessary. Tesla's clearly going to be removing almost all, if not all, of the unnecessary features, functionalities, technology, everything. This is going to be a watered down, utilitarian, functional vehicle. This is the first time we've heard this in such explicit terms. Now, regarding FSD and autonomy, Elon again pointing out that the economics are insanely positive. We've heard the whole spiel about increasing the utility because most of the time vehicles are just parked, not being used. So Elon points out that given all the cars Tesla are making and have been making for a while are capable of autonomy, increasing the utilization by 5 times via autonomy, quote, then we're a hardware company with software margins. Regarding the gross margin this quarter, what contributed? In terms of the negatives, the factory idle time had a decent impact, while certain other factories ramped up well and contributed well for the quarter. One of the factories, they wouldn't say which, but it's either Berlin or Austin, came close to volume and costs of Fremont. Now, what? Wait a second here. Hold up. Did I make a typo or did they say volume? I mean, costs, yeah, cool story, bro, whatever. Volume? Fremont's like 500,000 3NY per year. That must be at Berlin. What the seriously, what the hell? I don't think the penny dropped when I heard that. I was busy typing notes. What? Okay, so apparently, the way I'm reading this, which you've seen the typos, so maybe I misheard.
For this quarter, in fact, one of the factories came pretty close to, in terms of per unit costs, to where we are for one of our other established factory, which is Fremont. So that was a positive in the quarter.
Well, holy shit. I didn't imagine that. He did just say came close in terms of volume and costs. It's got to be Berlin. Did Tesla just low-key accidentally point out that Berlin's now at around 500,000 units of Model Y capacity? Huh? Maybe that was a slip of the tongue. Surely not. To the same volume? I mean, the costs are cool, but close to the same volume as Fremont, which is 500,000 per year. Well then, Megapack was a key driver in terms of margins in the positive direction. Deployments obviously are very lumpy due to the product being in transit. When you need to ship an absolute ton, and I mean multiple tons actually of these things, it take a very long time for produced Megapacks to be shipped and then installed. So there can be a huge amount of variation to deployments quarter over quarter. Tesla flagging that now so people don't panic if there's some ups and downs along the way. Regarding the rate of cost improvement on existing products, the factory upgrades for the refreshed Model 3 are still ramping up. Cybertruck will drag on margins, obviously, and the economic environment is also a factor, and it's very hard to predict. And to quote, we are unflagging in our pursuit of cost reductions, both in terms of engineering costs and operations. And our intent is to maintain the trend in cost reductions. Now, on to pricing elasticity in the macroeconomic environment. Elon asked about pricing elasticity. There's very strong pricing elasticity, he responds. If Model Y was the cost of a RAV4, I can't believe he said this. Most people would not buy a RAV4. This is true. And by the way, eventually the Model Y will be cheaper than a RAV4, and at that point, no one will buy a RAV4, and at that point, what happens to Toyota? Oh, I remember this. They go bankrupt. I forgot about that. Yeah, rest in peace, Toyota. Elon also pointing out regarding affordability, and this is, by the way, just true and shocking. It's just unbelievable how many people are financially illiterate And I'm not like speaking down to people who have a low income. I'm speaking down to people who are financially brain dead. You can have a low income and not be financially brain dead. Unfortunately, most people, especially in the United States, are actually financially brain dead. A large number of people are living paycheck to paycheck and carrying loads of debt, which means they can't front the $7,500 for around 12 months for the tax credit. For those who don't know, it's not up front. So yeah, Elon rightly pointing out that the vast majority of people, when thinking about how much to buy something, what's it cost, etc., all they want to know is how much money do I have to pay immediately and how much per month. The end. Elon also went off a tangent on the work from home crowd being completely detached from reality, which is hilarious, slightly irrelevant, but hilarious. And Elon also, direct quote, "I can't emphasize enough how much of a factor cost is for most people. When you look at the cost reductions we've made in Model Y versus how much people's monthly cost to finance a car has gone up, the price of the Model Y is effectively unchanged." Well, that's interesting. How is it possible that Tesla's actually selling more Model Ys as they produce more if the cost to buy one is effectively unchanged? It's almost like there is still more demand than there is supply. But this is a very important factor. Despite the fact that the Model Y prices have come down significantly, the effective cost for people to actually own the vehicle, since most people finance, effectively unchanged. Pretty stunning that it's now the world's best-selling vehicle by volume. And they also pointed out it has become a lot harder to get debt, not only because credit has tightened, but also many banks have now gone belly up. Regarding the cost per vehicle coming down, there was a question also asked about some media reporting that Tesla was including radar in some Model Ys in China. That's bullshit. Not true. However, Tesla is running an experiment with a Tesla designed, which is super high resolution, radar in S and X, but has no plans to use that in 3 and Y. Tesla always engineering to make the products cheaper and better, plus also working with parts suppliers to help them make their operations more efficient. I mean, take a moment to let that sink in. Tesla literally helping their suppliers so their suppliers can drive their own costs down so that Tesla can get stuff from them cheaper as well. This is all the way up and down the supply chain. Tesla also working with logistics to bring costs down as well. And regarding cost reduction, Elon gave an example of there being an insane number of parts in a vehicle. The average cost of those parts, approximately bugger all. It's an Australian term for not much. Gave the example of needing to cut out a few cents of cost out of each product. In other words, cost reduction does feel like digging a tunnel with a spoon. We also heard that the factory upgrades have meaningfully increased total volume output. And we noticed a 200,000 unit increase just in Shanghai. Now, I'm not saying that the upgrades account for 200,000 units of production capacity increase, but I am saying the number went from 750 to 950 per year. Well, greater than 750 to greater than 950. And considering that Tesla was already an annualized rate of in excess of 950 prior to that change, where are they now? Like 1.15, 1.25 million, something like that. By the way, not surprised. It's been in my valuation model. Check it out on Patreon at the investor level and above. I expect Tesla will continue to eke out incremental capacity improvements at every factory over time. No end in sight. Every time they can delete a part or a process, they've got more room, same factory footprint, but now there's less stuff needing to happen. They've got more room to make more vehicles. And regarding timing on Giga Mexico and the 50% compound annual growth rate, which is now out the window, Tesla confirming they're 100% doing Mexico, but interest rates have to come down. Quote from Elon, "We are going to build it and we'll start an initial phase of construction next year, but I'm still somewhat scarred by 2009 when GM and Chrysler went bankrupt. Quote, I don't want to be going top speed into uncertainty." He continues, "We have room in Texas," as in the factory itself, still plenty of room inside the factory they've already constructed. Plus, there's over 200 acres and loads of unused space. So, Tesla can begin ramping the next-gen vehicle in Texas first. Personnel is the greatest challenge. Obviously, even generously, less than 2 million people in the greater Austin area, so it's very difficult for Tesla to get people. Elon also pointing out that if interest rates start coming down, Tesla will re-accelerate. Now, Elon, very candid here, and I agree with him. I think he's really got some emotional scars here. Quote, "I apologize if I'm more paranoid than I should be." I think he is. "I have PTSD from 2009. Fair. And 2017 to 2019 were no picnic either. Also accurate. So again, as I said earlier, it's funny because I was having these thoughts, you know, he probably does have PTSD while he was saying earlier in the call that they're slowing down, not going full tilt. I'm like, you know what? This is probably the PTSD from when Tesla nearly went bankrupt. Well, it turns out he literally said in his own words that is correct. Now, I could be wrong. I'm often wrong, but rarely in doubt. But I expect 12 months from now, rates are lower. They're full tilt on Mexico. And in retrospect, they're like, well, you know what? We're probably a little bit too cautious. We probably could have gone full speed ahead. But hey, better cautious than dead. And save the best till last, folks. Guess what? The Cybertruck delivery event, 30th of November in Texas. The invite, a shout out to the original unveil event as well. You guys remember that little picture? Everyone's trying to figure out what the is that? What is that? What angle is that? Is that the front, the back, the side? What? Huh? What? It's going to be absolutely epic. Cannot wait. Want more content? Early access, bunch of perks. Click the links in the pinned comment. Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a fuck ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. Certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point and something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1 shit, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it. You'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, snake oil salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link in the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.